The world's biggest miner, BHP Billiton, has posted the biggest loss in its history and the first in 17 years. That half-year loss came in at $5.67 billion. Slumping commodity prices have hurt the big Australian, but on the flip side, lower oil prices have helped Qantas more than triple its first half earnings to $688 million. It's a record result for the Flying Kangaroo.
The best international carrier's 95 years history.
Its ongoing 3-year transformation plan has saved nearly $1.4 billion. Lower oil prices wiped $448 million from its fuel bill, the CEO earning the respect of investors.
The fact that he's turned over the business, the loyalty business is starting to pick up.
So too its international unit.
The lower Australian dollar is driving an inbound tourism surge.
Qantas has made more seats available,
especially on strong Asian and North American routes.
Building its 3 major alliances, which helped its international business enjoy a 4-fold increase in underlying earnings.
Considering the position Qantas International was in just a few years ago, this turnaround is truly remarkable.
Its local operation is growing. Domestic customers will soon enjoy in-flight Wi-Fi.
On-board trials will begin later this year, and full rollout across all domestic passenger service will follow in 2017.
Record results too from its low-cost carrier.
This half-year's profit is bigger than the best ever full-year result in Jetstar's history.
The unions want that money reinvested into the workforce.
These are largely low-paid, part-time workers.
Qantas was a big loser on the share market today because it didn't pay a dividend. Instead, money will be returned to shareholders in the form of a $500 million share buyback.
The market, especially self-managed super funds, do like to see dividends and distributions being returned to the shareholders.
BHP Billiton shareholders will receive a smaller dividend as the company ends its 20-year-old policy of increasing payouts. Global economic uncertainty, along with well-supplied markets, have hurt the company.
They've weighed on our commodity prices and they've driven the shares in our sector to decade lows.
BHP shares have slumped about 40% since this time last year. A massive write-down of its US shale assets and costs associated with its Brazilian Samarco joint venture mine tragedy also impacted its bottom line. But there may be some upside.
The outlook statement showed that BHP's earnings are probably on the way up, and we've seen a bottom in commodity prices.
With a more flexible balance sheet, BHP says it can make acquisitions if it sees value in quality assets.